Hey, I'm Dion Rabowen. I'm a markets reporter for the Wall Street Journal, and I want to talk to you a little bit about a story that I think hasn't been getting nearly enough attention. And that's about the rising value of the dollar. The dollar rose by 7% last year. That was its strongest year since 2015. So here's why the dollar is rising and how that increase in the value of the dollar could have a major impact on the value of the stock market. Let's get into it. So why is the dollar getting stronger? Well, it starts with the rebound that we've seen in the US economy. In 2021, the US added around 6 million jobs. The other big piece of the economic puzzle is gross domestic product, GDP. US GDP is expected to grow around 6% for 2021. That's the best year we've had in quite some time. Now, all that matters to the dollar because the value of the dollar is reflective of, again, the US economy. People want to put their money in a place where they know it's going to be safe, and in a place in an economy that they think is going to grow. And when more people want to put money in dollars, it makes the value of the dollar rise. Having a strong economy is great, but what really draws the value of foreign money to the US and the US dollar is high treasury yields. Now I know what you're thinking, the US treasury yields are historically low, but if we compare them to other industrialized and developed nations, well, the value of US treasury yields is very high. That drives a lot of money from outside the US into the US. When I talked to one of my longtime sources, John Doyle, he's the vice president of trading and dealing at Tempest Inc., he tells me that the biggest factor has been the hawkish turn by the Federal Reserve to fight persistent inflation here in the US. The Fed is expected to hike interest rates faster than most other central banks this year. Now, that's going to, in theory at least, raise the value of US Treasury yields and make the dollar even more attractive as a place for foreigners to store their money in the US. So why could this be a problem for the stock market? Well, let's think about it. Experts agree corporate profits are the biggest driver of stock prices, and US companies have increased their overseas presence in recent years. And in fact, S&P 500 companies generated 40% of their revenue from outside the US, according to FactSet. Now those other countries, they've got other currencies, and when the value of the dollar rises, the value of those currencies declines. Now usually prices stay pretty stable, so if the price of something isn't rising, but its value in dollar terms is declining, that means companies are making less money. Think about it like this. If something cost 100 euros and you were getting $120 for every euro, but now you're getting 110, well, that thing is still being sold for 100 euros, but you as an American company are only getting $110. That's a loss. This is what happens when the value of the dollar rises. The dollar's 7% gain in 2021 basically reversed its entire loss for 2020. So if we're back where we were in 2019, we're back at a place where the strong dollar is hurting companies and hurting international sales. Lower sales equals lower profits, which could drag down stock prices. If this continues into 2022, you can expect to hear more executives complaining about the strong dollar. Now add to that supply chain bottlenecks, inflation, and a Federal Reserve that instead of cutting rates and making conditions easier, is making things tighter. And you can see why the strong dollar could have a real impact on the stock market.